recent policy signals and fiscal measures tell us about Malaysia's growth prospects in 2026? How do governance reforms and expanded digital systems support business confidence and competitiveness? Which sectors and demand drivers are likely to anchor growth amid a cautious global outlook? And as geopolitical tensions influence trade and energy markets, where do the key risks and opportunities lie for Malaysia in the year ahead? I'm Muhammed Ahmad Hamdan, and this is Money Matters. Hello there, good evening and welcome to Money Matters on your favorite channel, TV3, where you can also stream on Tonton. Joining us today in the studio is Executive Director, Socio-Economic Research Centre, SERC, Heng Guie. Mr. Lee, thank you so much for taking the time to be with us on this first episode of 2026 for Money Matters.
Thank you for having me here.
Right, now, Lee, in the New Year message of the Prime Minister on January 5th, 2026, the Prime Minister announced the continued payments of STR, that is the Sumbangan Tunai Rahmah, and also SARA. Which sectors do you think are likely to benefit the most from the increased domestic spending, and how should businesses position themselves to capture this demand?
Okay, both the STR payments and SARA combined is about 15 billion ringgit for this year. I think the objective is to help the low income, the middle income, to ease the cost of living pressure. So I think the money will go into the system, and that will create a lot of spending. And it coincides with the first quarter of this year, where you have the Chinese New Year coming, and then you have the Bulan Ramadan.
Yeah.
So I think the sector will likely to benefit. Obviously, are those who are participating in the outlets. I mean, these are the supermarket, the grocery store, the retail. So retailer will be the one to benefit, whether they are in urban area, in the rural area, or even those that outskirts. So I think before we look at all this sector that be positive to impact from this, I think it's good to update you all. I mean, based on the latest November 23rd last year number, how many outlets participated? There's altogether about 9,200. And out of the 9,200 outlets, more than 3,000 are small shops. And the intention now is to get the numbers up more, up to 10,000 by end of this year. So that will even more inclusive and more accessible to the people. And when they get the money, they can spend. So I think the other thing is that when you look at the what I call the SARA, that one is a one-off 100 ringgit for 21.2 million population.
For all Malaysians,
all Malaysian
18 years of age and above.
And I think if you want to link up to what the sector to benefit, will be 14 categories of things under the STR and SARA. So they are the rice, eggs, bread, you have the biscuit, flour, cooking oil, even for like school reopening, supply of school uniform, also eligible.
And household cleaning
household
supplies.
Cleaning, everything all there, 14 categories. Hopefully we hope that government can widen the category, and also for more item will be going into that 14 category. I think that will be ongoing enhancement, and hopefully that will help to keep all this low income, ease their cost of living pressure, and positive a bit on the spending. And how business benefited, I think the supplier will benefit. Obviously, those who supply all this item to the designated participating outlets or shops or even like a grocery store, they will benefit. Like even your middle or the supply chain. So everyone will benefit.
And in his New Year message, Datuk Seri Anwar also highlighted expanded digital systems. How will the accelerating digitalization of government services help businesses in the country?
Now, to give you some perspective, last year alone, Malaysia achieved 80% of the end-to-end online government services, the e-services. And the target now is to get higher to 95% by the year 2030. Now, that is the so-called you may see more incorporation of the AI technology into the public sector transformation to enhance the public delivery services, to reduce bureaucratic procedure.
I think this is also in line with the implementation or the rollout of the e-invoicing policy.
E-invoicing, your My Digital Framework, etc. There's a lot of digitalized ecosystem to make government more efficient, and when government is more efficient, it will help business. Now, when all this digital economy system is more in place, and government continue to upgrade it, this initiative will result in what? Improve the business environment, reduce the cost, reduce the compliance cost, enhance the business efficiency, right? When you enhance the business efficiency, that you make business more informed. They know, when you have the online, things will be more simplified, procedure simplified, assuming everything are online. So you save a lot of time, the back and forth. Right, everything will be more streamlined, and business will find it very efficient to deal with government offices, whether the front desk, whether it's different ministry you're talking about. Assuming you're dealing with those ministry of what I call the housing, or the municipal council. If everything is all online, you don't even need runner to do all this. You can just click on and apply like licensing, approvals, and with the e-services, it can also help you to track your compliance side. You have alerts to tell you, hey, it's time for renewal of business licenses. So all this will simplify, and it will help. It will help. To me, most important, when government want to take up all this initiative, continue to enhance it, they will have to regularly upgrade their system. System. They have to adopt new technology, and most important, you could have government services. Your people who manage that must also be digital savvy, right? So you have to invest in digital talent. And to me, when the public sector transformation is not just comprehensive but impactful.
The Prime Minister announced bills to separate the Attorney General and Public Prosecutor roles, and passed the Freedom of Information Act, and also capped the Prime Minister's tenure. How do you think these governance reforms strengthen investor confidence in Malaysia's competitive advantage?
I think for Malaysia to move forward, it's not just about strengthen the economic management or financial management. The other important part is institutional reform. So I think I'm happy to know that the PM speech talking about this 4 bills that we are looking forward that the current parliament sitting will look into this 4 bills, whether they can complete within 1 year or hopefully that's within 1 year. I think let's talk about the first bill, separation of power between the AG and the prosecution. Right? To me, is good. You enhance the credibility, right? Independence of the public prosecution system without you remove the political interference. This has been long overdue that we want the separation of power between the AG and the prosecution. Now, second, which is, when you limit the 10 years, the maximum 2 term, right, for Prime Minister.
Prime Minister tenure.
The role of Prime Minister is very powerful. And very precarious. If you look at a lot of country experience, some may not have the limit, some is forever. It depends on all the political system, how unique your political system, and also in terms of your historic perspective or contact to decide whether you need to have 1 term, 2 term, 3 term, or forever. So in this case, Prime Minister said, okay, now this part of their previous PH manifesto, I want to limit. It's good. Why? Because you curb the power concentration, right? You prevent the abuse of power, and you give people a chance. What you call promoting leadership renewal. That is, to me, is good. And third bill, which you're talking about, ombudsman bill, right? That will further enhance the transparency and accountability in public administration and delivery services. That's in line with what we call transparency of government delivery and enhance their efficiency. That help private sector.
Okay, Lee, we actually have more to talk about, but we're going to go for a quick break right now, so hold that thought. To our viewers, don't go away because Money Matters will be back shortly. Welcome back. We're speaking with Executive Director, Socio-Economic Research Centre, SERC, Heng Guie. Lee, the government emphasised support for high-value manufacturing and technology clusters. In your opinion, which specific subsectors are likely to attract the most investment this year, and what signals should corporates watch for in this space?
If you look at over the past 3 years, right, the government has launched many transformative and catalyst plans, roadmap to make Malaysia more competitive, to move towards a high-income economy. So you have the Madani Economy Framework, you have the New Industrial Master Plan 2030, you have the National Energy Transition Roadmap, NETA, you also have the National Semiconductor Strategy Plan, and also other related to digital, the AI, etc. So, and I'm very bullish about Malaysia private investment cycle. We are on an upturn. The upturn has been very strong for the last 2 years, and this year we expect to continue. Though we expect the private investment growth to grow about maybe 8.1% this year. You compare to last 2 years, 2024 and 2025, on average about 11.2%. Now, coming to what the sector will continue to drive the investment, I think these are the high quality sector. And why? Because I think the last 2 to 3 years, we see improvement in the overall business ecosystem. Yes, there are some cost pressure last 2 years because of government continued fiscal reform and other regulatory compliance that put a lot of pressure on the cost of doing business. And hopefully this year and next year, we will not see much pressure coming. So I think the business are trying to adjust to the new cost environment. But despite that, we see inflows of investment coming quite strong.
Now, the RAM ratings agency projects Malaysia's GDP growth at between 4% and 5% this year. And of course, World Bank has a much more conservative view at 4.1%. Is 4 to 5% a good number for GDP growth for Malaysia this year?
Our projection for this year is 4.5%.
Okay, so you're somewhere in the middle.
Yeah. Compared to 2025, I think for 2025 we only have first 9 months data. That time, I mean, we had already achieved 4.7%. So my full year for 2025 is 4.7. So this year 4.5 is a bit slower.
Sweet, so, but that's still bullish. 4.5.
Still relative compared to other ASEAN countries, except for Vietnam, Philippines. We are still consider quite a reasonable pace of growth. Okay. So what are the factors that I consider? I think for this year, it will still be domestic demand driven. And what would support the domestic demand is you help your fiscal support policy is still very positive. Central bank had cut rates last year. So that will be less restrictive monetary policy.
Because of the US reciprocal tariffs?
Last year export was maybe doing about between 6 to 6.5%. There's a lot of front-loading activity ahead of the tariffs.
Because of the tariffs,
Correct. So this year, people are concerned about whether it's a payback period. Last year, you had a lot of front-loading. This year, you could normalize it. So that remains a wild card, which I'm projecting about 3.5% for export. So my growth mainly coming from the domestic demand. Yes, two sides, private sector spending and also government spending. And the fiscal budget is still quite supportive. There's a lot of measures to help the business, and there are also measures to sustain the consumption. And also, public sector is getting another pay rise. I mean, the phase 2 of the increment, the salary increment for the public sector.
And then private consumption contributed about 60% to our GDP last year. What are the key drivers and also risks to household spending in 2026? And also, economic sectors that will contribute to the overall GDP in 2026, if you can share that.
On private consumption, is the largest contributor for the whole economy. I think Malaysia population is about 34 million. How much you can spend? So this year I'm looking at growth about private consumption growth 5%. So last year maybe about 5.1. We have not seen stronger than pre-COVID or even post-COVID where there's a revenge spending, right? We saw very strong growth, but I think now it's more
What was
normalized.
the level pre-pandemic?
I think there's 1 year we even have 11%.
Oh, okay, that's high.
I think on average it's about close to 6+% average. So I think now we'll normalize to about 5. The best we can do maybe 5.5, but this year I'm looking about 5%. Last year about 5.1%, about stable.
This will definitely be supported by, these cash handouts.
I think key supporter is a very good, stable labor market. I think labor market in November last year is about 2.9%, the best in 11 years.
Yeah.
And then followed by all the income supported policy, your STR, your SARA. Then you have the government servant get a second phase 2 of the increment.
So hold that thought, because we're going to go for a quick break. Money Matters is taking a short break, so don't go away, because we will be back shortly. Thank you for staying with us. We have with us here in the studio Executive Director, Socio-Economic Research Centre, SERC, Heng Guie. Now, Lee, we want to explore geopolitical risks. We mentioned a little bit about that earlier.
Yeah.
We want to explore the risks and also opportunities that Malaysia can tap on. With rising US-China tensions, evolving ASEAN trade dynamics, and also ongoing developments affecting global energy and also commodity markets, including what's happening in Venezuela right now. How do you see geopolitical risks influencing trade flows, export opportunities, and also Malaysia's growth in 2026 overall?
No, I think how Malaysia positioning itself as a place where investment will continue to come here, and how do we continue to grow our trade with all this ongoing geopolitical tension or risk. So I think one way we can see that Malaysia is still one of the preferred investment location, given our strategic location in ASEAN. That explains why Malaysia is still one of the countries that they will consider under China +1, right? So we are timely. I think Malaysia government timely launched all these transformative plans, quite in line with the global trend, talking about renewable energy, semiconductor technology. So these are the industry in the upcoming, in the mega trend, right? So investors will still consider, Malaysia is a place where I think, yes, we are neutral. I think Malaysia is neutral between US and China. And within the ASEAN, we are one of the more promising country that they can consider to put their relocate for whether it's reshoring, nearshoring, friendshoring. So we can see the numbers are telling you that FDI, I already mentioned some of the approved investment continue to flow in from year 2021 onwards, whether it's to different part of the states, different state in the whole country, but also focus a lot in the Johor, Singapore, SEZ. So as a business side, if you are doing export side, the government will help you by having more FTA. I think now we are having about 18 18 FTA. So that, and also they are looking into new markets. New market where? GCC, GCC, and not just the traditional market, and you also may explore some of the Middle East market and even the Africa country. I mean, just to name you, South Africa, I think they are a big buyer of palm oil. You know, I think it's Kenya, if I'm not mistaken. So all these are showing effort. You know, business have to work together with government and find new markets and explore new market.
Of course, one of the highlights for this year is the Visit Malaysia campaign, which was first launched in actually 1990, followed by 1994, 2007 and 2014. Do you think the Visit Malaysia campaign can help achieve the visitor target of 43 million and tourism receipts of 329 billion ringgit, or equivalent to 15.5% of GDP this year?
Now, before we talk about whether it helped or not, I think first we have to understand how big is the contribution of tourism to the whole economy. Right? It's a major engine, you know. To give you some numbers, in 2024, tourism sector value-added growth contribution total about 291.9 billion, or it's about 15.1% of total GDP. And if you look at the direct impact of tourism into some sector like your food and beverages, hotel, accommodation, etc., that's about 6.2% of GDP. And employment is about 3.5 million people employed, close to 21.6% of the total employment. So you look at the whole tourism, whether it's direct, indirect impact, is huge. The spillover effect is very wide. That's why it's important for government to get it right for the Visit Malaysia. If you look at the past Visit Malaysia campaign, you highlighted some of the number of years that the years that we had conducted, has successfully boosted the numbers of tourists and also in terms of the economic value contribution to the country. So I believe this time around we will still be hitting the target. Now, the target for the Visit Malaysia this year is 43 million. And 43 million, I was told they may subject to some further revision. Depends on the outcome of the 2025. Now, based on the first 11 months of last year, visitors to Malaysia about 38.3 million. And I think you take a simple average, I believe we can hit the last year target of 43. So which means that this year, 2026, you may have to revise
upward.
Early on, they have a 47 million, but subsequently they put it up 43. So we are still waiting for the official, what is the target
for 2025, the full year.
Even for 2025, most likely, I think they can hit the 43. Based on the first 11 months data, of 38.3 million.
Talk about labor and productivity, which grew 1.7% in 2025. How can businesses strategically align workforce development and basically STEM, the science, technology, engineering and mathematics initiatives to capture productivity gains this year and moving forward?
I think if you look at productivity, it's a very important indicator to help the business growth sustainability, right? Because impact on your efficiency, impact your profitability, and most importantly, impact how competitive you are in the marketplace, whether in the domestic market or the overseas market. Now, we see improvement in labor productivity. That's good. At least what you pay them, you can see improvement in productivity, right? But we want more, right? Because we are competing in a very highly complex environment. So there's a lot of innovation happening, technology, AI. So you as a business side, how do you strategically manage all this improvement in productivity and align together in your company? So you have to continue to upgrade, continue to invest in technology, continue to provide the training, the reskilling, upskilling to the employees so that they can improve overall the productivity and help to bring your unit cost of production output lower, then you become more efficient, more competitive. You must continue update, and that would be changes. There will be a lot of changes happening in the marketplace, the business place, that you need to invest in training, most importantly. As a government can help you, provide some incentive, grant, but a lot is still on you as a business together with your employee. You know, that is the approach. I think based on some of the survey that we have done, a lot of businesses don't really fully utilize some of the training fund or by the government. You know, either they not aware, or they find that it can be further enhanced to make it easier for them to utilize all this HRD COP fund or in training. So I think that's something that I think private sector can work together with the government side to enhance the utilization of the TVET, and there's still a stigma, between TVET graduates versus a non-TVET graduates. There's a big gap, I think parents are a bit reluctant to to tell the children to go for TVET education. They prefer to go to non-TVET. So there's like your different level of education, your bachelor degree, your diploma. The gap in the wage is still quite big. Yeah.
But you do agree that there's plenty of opportunities in the TVET sector for those who come from TVET education.
In 2026, government give allocation of 7.9 billion TVET. Compared to 2025, it's 7.5 billion. So government continue to put money into TVET. In fact, they also asking all the GLC to participate in the TVET. So they want to change the stigma, the perception about TVET. In other countries, TVET is considered high, where they are given the right compensation. They don't see them as a lower subpar, right?
And Heng Guie, Executive Director of Socio-Economic Research at CRC, thank you once again for taking the time to be with us on this episode of Money Matters. We really, I had a pleasure talking to you throughout this episode.
Same here.
Thank you.
Same here. Thank you. Thank you.
Now, for the past half an hour, you've been with us on Money Matters. If you missed any part of today's episode, you can always catch it up on Tonton. Be sure to join us next week, same time, right here on TV3. I'm Muhammed Ahmad Hamdan. Thanks for watching and have a great weekend.